Hello there. Welcome back to the talk on economics. This video, I want to look at a question paper of March 2022, and we are going to look at a common test. So we are going to look at section C on this question paper, that is on essay. So we go to our essay. We are going to look at the essay on macroeconomics, and our question, question that our question is got 40 marks. So the first part of our question, and it is use fiscal policy to stimulate economy, and it has got 10 marks. So basically, this is the additional part. This is the additional part. So this one essay, but we know that we have got a layout that we need to follow in terms of an essay. We are going to start with the introduction, and then we are going to go to the main body, then we end with our conclusion. So obviously, according to our introduction and the requirements that we have in terms of introduction, we have them stated here, whereby the introduction is a lower order response. And first point is saying a good starting point would be to define the main concept. We have to take note, do not include any part of the question in your introduction, and do not include any part of the introduction in your main body. And avoid saying in the introduction what you are going to say, what you are going to discuss in the body. So basically, these are the key points to note in terms of introduction. So basically, if you look what is required to constitute the introduction concept, so we are just going to try to look according to your question and try to define any main concept that we have in the question. So if you go back to our question, you'll see that we have got a market and that is there. So you have to look for an economic term and that is there, an economic term or a business term that is there in the question that you can try to define, even if you define two of them. So here we see that we've got markets, also have fiscal policy. So you can choose between the two, which one can you define, or you can just briefly define them all. So basically, if you look at a market, we know that a market it's a place where buyers and sellers can exchange goods and services. So you'd see that it doesn't have to be a physical place, but it can also be a virtual. So that is what we have to explanation of a market. So this is how you can come up with your introduction. So from there you go to your main body. So according to our main body, we are going to discuss in detail the markets within the four sectors. So we've got different markets that we have. We are going to see that we can talk about the product or goods market. We can have the factor or resource market. We can also have financial markets, and finally we can also mention the foreign exchange markets. So this is what we have on our other section. So we are going to go market by market and try to discuss in detail as required by the question. So we can go and to other section and see what we have according to this video. So we are going to start with your product or goods market. So remember, the product or goods market, that's where we have the exchange of goods and services. So basically, that's what we have in terms of a product market or a goods market. So the first point is that goods and services are traded in the product market. All participants purchase these goods and services in the product market. So basically, that's what we have. That what constitutes our goods market. Then the second point, goods are defined as tangible items such as food, clothing, and cars that satisfy some human wants or needs. So you see that we have got the classification that we can give in terms of these goods, whereby we have got tangible and also we have got non-tangible goods that we can also try to mention. So on tangible, we are saying examples that we are giving, we have got food is a tangible, clothing and cars. So we also have services. We have services that we have that are intangible actions or goods such as clinic services, medical care. We have that satisfy human wants or needs. That's what we have. And then we also have non-durable goods. We also have semi-durable goods. Durable goods. So that is the other classification that we can also come with, whereby non-durable goods, we are saying these are goods, those items which are used up when they are consumed and cannot be reused. Then we are giving an example there. We've got a cold drink, petrol, electricity, and also we've got semi-durable goods that last a short period of time and can be used more than once. And that is again, and do not wear out easily. And I'll give an example of vehicle. So obviously, all those non-current assets or fixed assets are part of durable goods. So lastly, we've got households purchase consumer goods for consumption, and businesses purchase capital goods for use in the production process. So basically, that's what we have in terms of our product or goods market. Then the next market that we have, we call the factor or resource market. So remember, in the factor or resource market, that's where we are going to have the exchange taking place between the factors of production, and obviously those offering those factors of production are going to receive the factor incomes. So you see that each and every factor has got its factor income. So the first point is that four factors of production are traded for income in form of wages, interest are being a factor income of rent, and then profits are, we know, the point businesses purchase the factors of production from the households in the factor markets. Yeah, next point, the price and quantity traded is also determined by interaction between supply and demand. Lastly, there on this page are the factor market can be further subdivided into markets in which different factors of production like labor, property, and financial market. So basically, this is what we have in terms of our factor or our resource market. So going on to the next market that we have, we've got the financial market, but we are going to see that under the financial market also we have subdivisions whereby we're going to talk about the money market also, and also we are going to talk about the capital market. So the explanations that we have according to financial market, the financial market saves those who wish to save and those who wish to borrow, and the markets. So basically, that's the subdivisions that we have under financial market and foreign exchange market. Then the next point, this sector represents financial services, but a link between participants in the economy in the surplus money. This is what we have. Then next point, households make their financial capital available to the financial sector in the form of savings under the financial market. Then we go to the first subdivision under the financial market, whereby we are having money market. So this is used by participants as a means of borrowing and lending. So basically, the borrowing and lending of short term, obviously, we see that in the money market, and the short term is being described by a period of just less than 3 years. So this is that what the South African Reserve Bank is a key institution in the money market, is the central bank, and the central bank is the banker to all banks. So obviously, it controls activities in the financial sector. So we go to the next subdivision, which is capital market. The capital markets, this is a financial market where individuals or institutions trade financial securities in the long term, which is 3 years and above. And the Johannesburg Stock Exchange, which is JSE, is the key institution in the capital market. Then we go to the foreign exchange market. So in this foreign exchange market, it's in an open economy, foreign currency is traded to facilitate transactions between countries. So an open economy, obviously, we might also need to understand what we mean by an open economy. But we know that an open economy is an economy which interacts with other economies or other countries. We are talking about an economy which engages in international trade. So obviously, for a country to engage in international trade, it has to have the foreign currency to buy those goods from other countries. So basically, in that sense, it means it has to penetrate the foreign exchange markets to acquire those currencies. So we go to the next point. It is on this market that one currency can be exchanged for another. And the amount that is received in this exchange is known as exchange rate. So exchange rate becomes the value of the currency in terms of another currency. Then I will go to this point. The exchange rates are normally determined by the interaction between supply and demand. And they are sometimes influenced by the Reserve Bank. So depending on the exchange rate system that is being used in the country. In some countries, the exchange rate will be determined by the forces of supply and demand. But if you look in some countries, it is a rate that is going to be imposed. It will be a fixed exchange rate system. So basically, that's what we have. Then that's what foreign currency can be acquired through commercial banks. That's another explanation that we have on foreign exchange market. So this is what we have according to the foreign exchange market, which is the last part of our components of markets. So we now go to the next part of our question, which is now the stimulate economy. So fiscal policy on its own, we know that this is a policy that is set by the government, and obviously it uses two main instruments, and the two main instruments that are implemented under the fiscal policy, we know that is taxation and the government spending. So basically, those two instruments are adjusted to control economic activities in the country. So in that sense, We are now going to see our question now for is how can the government use fiscal policy to stimulate the economy? So in this case, the stimulation of the economy is the increase. How can we use the fiscal policy to increase the production of goods and services in the economy? Obviously, we want to activate economic activity. That's the stimulation of the economy. So basically, that's the approach that we're going to use for the additional part. So how can the government do that? So it can play around with the instruments under the fiscal policy to stimulate activity in the economy. So remember taxation, the government can just reduce taxation. It's so doing, they are making the prices lower. And obviously, if prices go down, we're going to see demand going up. So according to the law of demand, and when that happens, obviously, we are going to see businesses now earning more revenue, thereby their profit margins are also going to be widened. They earn more profits, and then obviously they retain those profits and increase their production capacities. So thereby there's no stimulation of economic activity. We are going to notice an increase in the production of goods and services. So basically, that's what we. So we have the additional part being articulated on this page, and it reads that the government can increase government spending, thereby creating jobs. So government spending becomes another instrument that is used under a fiscal policy, whereby it's used also to create jobs. Remember, the essence of government spending, it can be described from the point of view of subsidies when firms that are facing a cost of production are funded by the government so that the cost of production goes down. And in that case, it's going the business are going to widen their profit margins, and obviously they expand their production capacities. And then through the expansion of the production capacity, that's where they're going to accommodate more workers, and the jobs are created. So the next first point that we have here says through the development of infrastructure, and this stimulates the aggregate demand and level of production, which is actually something that is coming from an increase in government spending. Then you go to the next point: the government can provide public goods and services to kick the multiplier, that's stimulating economic growth. So basically, the essence behind is just to increase economic activity, which is like increase in economic activity is explained from the point of view that there is increase in the production of goods. So we are seeing that we have got economic growth here, and economic growth, we know that this is the increase in the total amount of value of goods that are being produced from one period to the other. When you notice that there's an increase, then we've got economic growth. So basically, that's the stimulation that is being mentioned there. Then you go to the next point: South African government spends large sums of money on education to improve the quality of labor and productive capacity of the country. So by spending large sums of money on education, obviously, they are trying to transfer the knowledge to the workers so that they can be able to produce those goods. And then we are going to see the stimulation of the economy. So basically, that's what we have. The next point: the government revenue can be used to provide incentives to promote new and developing grants that are transfer payments given to households, increase disposable income, then increase aggregate demand. So basically, when aggregate demand increases, that is going to lead to increase in economic activity. Then lastly, the government can influence the total demand and spending by cutting taxes to increase disposable income. So we have explained in the beginning of the explanation that whenever there is a decrease in taxes, it's going to be a positive in terms of the movement of economic activity in the country. So basically, this becomes our last point, and you know that our additional part is got 10 marks. So this marks the end of our essay. Then after that, now you are going to go to your conclusion and try to conclude, which is not going to be part of this video, but we know that the instructions in terms of how you are supposed to come up with your conclusion will be stated on the requirements of your essay. This is where we have got the requirements of the conclusion, whereby they say, any high order conclusion should include a brief summary of what has been discussed without repeating facts already mentioned, and then any opinion or valid judgment on the facts discussed, and then additional support information to strengthen the discussion or analysis, and then a contradictory viewpoint with motivation if required, recommendation. So all these are all options that you can choose between them to see which one is viable according to you, and you can come up with your conclusion. So this is what you guys are going to do in this video. Let's stay tuned for more videos to come. We are going to upload more typical examination questions on this channel. So let's stay tuned. Let's turn on the notification button so that when we upload new videos, you get notified. As for this video, I'm signing out, and let's meet again in the next video.